I'm going to show you exactly why gold is doing something right now that almost nobody saw coming. And I mean nobody. On day 6 of an active Middle East conflict, an Iranian warship was reported sunk. Tehran is burning from Israeli strikes, over 1,000 lives lost. The Gulf is on fire, and gold is doing something absolutely unthinkable. It crashed, then it spiked. Then it crashed again, all in the same 24 hours. So what is actually going on? Is gold broken? Or is this the setup of a lifetime? Here's what I'll tell you right now. There is a plan behind all of this volatility, and by the end of this video you'll know the real forces driving gold towards $6,000 and beyond. You'll understand why 2026 could be the most important year for precious metals in a generation. And I'll show you exactly how I'm positioning my own money right now. So stay with me, don't skip ahead, every minute of this video matters. Let's get into it. Let me paint you the picture of what happened on day 6. A U.S. submarine reportedly engaged and sank an Iranian naval vessel in the Gulf of Oman. That is not a small event, that is an act of war. Simultaneously, Israeli strikes hit central Tehran. Reports confirm over 1,000 Iranian casualties in a 48-hour window. The UAE and Qatar publicly condemned Iran, stating that Iran had crossed a red line, two Gulf states that once stayed neutral. Now they're aligned against Tehran. Let that sink in. The entire Gulf power structure just shifted overnight. So what did gold do? Gold spiked to $5,400 in the first 2 hours after the warship news broke. Then it faded. By end of day it was sitting near $5,100, a $300 swing in a single session. And people are asking me, is gold losing its safe haven status? Absolutely not. Let me explain what's really happening here. When fear spikes this fast, institutional traders do something called a risk-off flush. They sell gold contracts to cover losses in other positions. This is not weak gold. This is forced selling, and it creates the most dangerous kind of opportunity, the kind where smart money buys. What panic is selling? Here's the data that most people are completely ignoring right now. COMEX gold inventory has dropped significantly over the past 90 days. The paper-to-physical ratio on gold contracts is sitting near 300 to 1. Think about that. For every single ounce of real physical gold sitting in a vault, there are 300 paper promises floating around. What happens when those promises get called in? Money has to go somewhere. When currencies weaken, hard assets strengthen. That is not a theory. That is 5,000 years of human history. Gold doesn't lie. Gold doesn't print more of itself. And right now, de-dollarization is accelerating. China, Russia, India, Brazil, Saudi Arabia, they are actively building trade systems that bypass the US dollar. The BRICS payment system is not a conspiracy theory anymore. It is operational. It is growing. Every time a major oil deal gets settled in yuan instead of dollars, it reduces global demand for the dollar, and reduced dollar demand means one thing for gold: higher prices. This war in the Gulf is not slowing that process down. It is speeding it up. Countries that were on the fence about dollar dependency are now watching the U.S. project military force in their backyard, and they are accelerating their exit from dollar systems. This is a long-term river flowing toward gold, and it does not stop when the shooting stops. Now let's talk oil. The Strait of Hormuz is the most critical energy choke point on the planet. About 20% of all global oil supply flows through it. Iran has threatened to close it before. With a warship now sunk and Tehran under attack, that threat just became very real. If Hormuz gets disrupted for even 2 weeks, oil prices go vertical. We are talking $150 to $200 per barrel scenarios. And what does $200 oil do to the global economy? It crushes supply chains. It spikes inflation. Or print money and inflate everything. Either path is gold positive. Either path destroys paper currency purchasing power. Either path sends more capital flowing into hard assets. This is not speculation. This is the math. Oil chaos equals inflation. Inflation equals gold demand. Gold demand with limited supply equals higher prices, much higher prices. It will genuinely shock you. Global gold mining output has been essentially flat for nearly a decade. New major gold discoveries are extremely rare. Existing mines are getting deeper and more expensive to operate. Meanwhile, demand from central banks has been surging. 2022, 2023, 2024 all saw record central bank gold purchases. Central banks are not buying gold because they think it's a bad investment. They are buying gold because they are preparing for a monetary reset, they know what's coming, and they are positioning ahead of it. Now layer on top of that the Gulf conflict. Supply chains for mining equipment, energy costs, logistics, all being disrupted, all adding cost pressure to gold production. Less supply coming in, more demand flowing in. You don't need a PAAHDAADDDDHEHE to know what that equation equals. This one is critical. Most people who think they own gold don't actually own gold. They own a paper. Promise, an ETF share, a futures contract, a number in a spreadsheet. And as long as the financial system works perfectly, that's fine. But we are living in a time when the financial system is not working perfectly. Exchange glitches are happening more frequently. Counterparty risk is rising. The paper gold market dwarfs the physical market by an extreme ratio. When confidence breaks down and everyone wants delivery of real physical metal at the same time. There is not enough physical gold to satisfy those claims. That is when you get a violent repricing event. That is when paper gold and physical gold disconnect. And physical goes to prices that sound completely insane today. Smart money knows this. That's why institutions, family offices, and central banks are moving toward allocated physical gold. Not paper, not ETFs, real metal in real vaults. The question you need to ask yourself is which side of that trade are you on? Let me walk you through the numbers clearly. Gold is sitting near $5,100 to $5,400 in this current volatile range. The analysts I follow most closely are targeting $6,000 to $6,500 as the next major level by end of 2026. Here's why that math makes sense. If oil disruption causes a 15% inflation spike globally, historical gold inflation correlations point to a 25% to 35% gold price response. If the dollar loses another 10% of its global reserve share, models show $500 to $700 added to gold price. If central bank buying continues at 2024 pace through 2026, that alone adds structural support above $5,500. Add a supply deficit that is now in its sixth consecutive year. Add geopolitical risk premium that is not going away anytime soon. You get to $6,000 not as a hope. You get there as a logical outcome of forces already in motion. This is not a prediction. This is a calculation. The volatility you are seeing in gold right now is not chaos. It is actually a shakeout. When gold spikes on fear and then fades, who sells? Retail investors panic sell, weak hands exit, and who buys those panic sales? The same institutions that have been loading up on physical gold for years. This pattern has repeated itself throughout history. Every major geopolitical event produces a fear spike and then a fade. And every single time, the people who held through the fade and kept buying the dips came out ahead. The warship sinking is not the end of this conflict. This is the beginning of a prolonged period of Gulf instability. Way and Qatar drawing lines against Iran is not a one-week news story. This is a structural shift in Middle East power dynamics. That structural shift means oil risk stays elevated. Oil risk means inflation risk stays elevated. Inflation risk means gold demand stays elevated. The plan is simple. The powerful accumulate during the noise. The informed hold through the volatility. And the unprepared watch from the sidelines wondering what happened. Which group are you in? Let me give you the practical side. First point. If you don't hold any physical gold or silver, this volatility window is a gift, not a warning sign. A gift. Price dips created by panic selling are historically the best entry points, not after the spike, during the fear. Second point. Buy from reputable, established dealers. Only verify premiums, verify authenticity, verify storage options. Do not buy from random online sources you've never vetted. Real metal from trusted sources is the foundation. Third point, diversify your exposure. Physical metal for the foundation. Allocated storage accounts for larger positions. Keep paper exposure minimal and understand its limitations. Fourth point, sizing matters. Do not put everything into one asset. Precious metals should be part of a balanced strategy. I personally hold a significant allocation to physical gold and silver. But I also hold other real assets as part of a complete picture. Fifth point, think in years, not days. The $6,000 target is a 2026 story, not a tomorrow story. If you are watching price tick by tick and stressing over $50 moves, you are playing the wrong game. Zoom out. The trend is clear. Stay positioned. Don't let short-term volatility shake you out of a long-term winning position, and join a community that is tracking this in real time. The comments section of this channel is one of the most informed conversations about precious metals happening anywhere online right now. Drop your questions below. I read them all. Let's figure this out together. Let me leave you with the single most important idea from everything we covered today. The Gulf is not calming down. The dollar is not strengthening its global position. Gold supply is not increasing. Central bank demand is not slowing. Every single macro force we discussed today is pointing in the same direction, and the warship story, the Tehran strikes, the Gulf coalition shift. Those are not one-time shocks. They are symptoms of a system under serious stress. Gold is not overreacting. Gold is the most honest signal in the financial world, and right now it is screaming. The volatility you see today is the noise. The $6,000 target is the signal. Don't confuse the two. In my next video, I am going to show you the specific indicators I watch to know when gold is about to make its next major move. Leading indicators that most retail investors have never even heard of. If you miss that video, you could miss the most important entry signal of this entire cycle. So here is what I need you to do right now. Hit the like button. It helps more people find this analysis when they need it most. Subscribe to this channel. We are building a community of informed, prepared, forward-thinking people. Hit the notification bell. Because when the next major event drops, you want to be watching in real time, not finding out a week later. The world is changing fast. The financial system is under stress, and 2026 is shaping up to be a year that defines generational wealth. Be on the right side of this. I'll see you in the next one. Stay sharp, stay prepared, and as always, stack wisely.